afternoon, everyone. Thank you so much for having us, and thank you for being here. Thank you to Abu Dhabi Finance Week for organizing one more fantastic event. And I'm joined on the stage with people who are, as it was announced, doing first and doing some fantastic innovation. So I'm just going to dive into it. Maybe to start with Ron, tell me about when did you decide that today's financial capital formation infrastructure needs to be changed, and how did you come up with your solution, and then how did you know that the market and the ecosystem was ready at the time?
Sure. So first of all, liquidity exists about 9 years now. We established the company 2017. The original idea was to bridge the friction in venture debt segment. But very quickly we discovered that it doesn't matter what private credit vertical you look at, there's different type of friction, depends on what vertical you look at. So when it's come to tech lending, the friction is on the due diligence and the origination and negotiation. And the challenge to scale is how do you track moving risk. But when you look up market toward private equity backed and after that to CLOs, they also have friction. It's just a different type of friction. How you do diligence at scale without holding thousands of employees and without deteriorating the quality of the decision that you're making over time. We discovered to build an asset management of new kind, which is basically a core of very deep technology company. 70% of our technology are data scientists and developers. And we develop the future technology on which we rely to deploy capital at scale. 9 years down the road, we had 0 loss ratio, deploying billions of dollars every year to companies in 35 different countries. So technology works. It bridges the gap quite efficiently.
It works. Sonki, shall we talk about FinStreet? Tell us about the same question, but in your case, how did this come about?
Thank you, Tamara. I think that the inefficiencies in the market are pretty evident. If you look at the global asset managers today, they're already managing 150 trillion of assets, and in various geographies or asset classes, etc. The fact that the capital is not fluid in terms of its movement between geographies and asset classes is not necessarily because of anything to do with it being strategic, but rather more operational. And if I specifically zoom into private market assets, there's a lot of manual processes, bilateral syndication, Excel valuations that the private market is still working on. And there is time that such a big market, which is 20 trillion asset under management, had a scalable infrastructure, had the discipline of the secondaries mechanisms, as well as access, which is global. And we're already seeing that in the market sentiment, which is that the investors would like to have exits and not be paying for the illiquidity, as well as we're seeing that the market infrastructure needs to come out. We are exactly building that at FinStreet, the virtuous flywheel, which will allow for trading for public and private assets across the world.
And as an innovation accelerator, how do you keep up with the speed? Do you update your solutions? What have you learned maybe over these few years? Maybe Ron, to start with you.
Question for me?
Yeah.
So at the end of the day, it's a matter of evolution versus revolution. When you pile information over a period of time, you discover that just by the fact that you have more and more information, you can deploy faster solutions in different segments. So for example, today we're already tracking in real time 160,000 companies. The things that we can understand today in the market, the different trends, the different velocities, are completely different than what we could understand from data 5 years ago, 6 years ago, and so on. And this is exponentially growth. So the key is the data. The key is not the technology. The key is the fuel that feed the technology, because technology by itself, it's nothing. It's just like a platform that you run through. If you have enough data, and that's, again, the key for everything, then the technology itself evolves just by the fact that you run more and more scenarios on it.
Suniti, what has been your main lessons over the past
So
years?
let me just start by saying that we are the innovators and we are the disruptors, and we are very young right now. But however, every decision that we are taking, we are very conscious that we lay foundations, that when blockchain and AI, which we are already slotted in for our current infrastructure, is no longer the technology, or there is another wave of technology that we need to adopt. For example, it could be quantum, it could be something else that we do not know. We make sure that our foundations and our processes and our technology is modular, that it will not hold us back, but rather, that we can move swiftly and we can adapt and adopt.
Yeah, true. Wilson, let's talk about adoption. And how do you see it's gaining, these new solutions are gaining momentum? So from your point of view, what will it take to move it from early proof points to really mainstream usage? As you talked, Ron even said everything is fintech, as everything will be fintech. Don't even think about it. So where do you see adoption now, and how do you see it going forward?
Thank you for your question, and I think we are the best position to answer this question because we Chinese are always good at adoption.
Yeah.
Just as His Excellency Hadun, spoke during his remarks in the Mubadala annual business forum on Saturday, and he mentioned the difference between the AI, especially between China and the US. Chinese is more good at the adoption of AI. So is financial infrastructure. Actually, we think the financial infrastructure development is mainly driven by technological. I fully agree with we see that the adoption is happening everywhere. For example, locally in UAE, we are very happy to see that UAE is carrying out a lot of measures of the modern regulatory reforms. For example, they published the new central bank law, and the week before last, UAE and China signed an co-developed central bank payment digital currency bridge, leveraging blockchain technology to enable direct settlement and payment for the two countries. So there are all the detailed measures for the adoption, and also, for CICC, we as a leading investment bank in China, investment bank always play an important role in the adoption of the financial industry, financial infrastructure development. One of the role we play is we want to make the infrastructure stronger. We want to provide more investment opportunities for the global investors to share the development of the Chinese economy. For example, this year we are doing quite well in the Hong Kong market. We helped, for example, CATL, the world's largest battery company, to get listed in Hong Kong and raised as much as $5.5 billion US. And many of the cornerstone investors are the sovereign wealth fund in the Middle East. And during the process, we also adopt some innovation of the financial infrastructure. We use the total return swap tool to help the different regions clients to access the Hong Kong market to participate in the IPO as a cornerstone investor.
Yeah.
And one more thing I want to mention is that everybody knows DeepSeek, which is happening in China earlier this year. Actually, the brother company of the DeepSeek is a leading quant trading firm in China named Highflyer, and we have been the trading broker for that company. And all these kinds of adoption is used for that.
Interesting. Ron, can you tell us your view on adoption of this new financial infrastructure?
Sure. So, from our experience, we discovered something very interesting, that tech adoption in finance is completely different than tech adoption in every other vertical of the market. The reason is very, very simple. If you adopt something and you lose money, you don't have a second version. You have only one version. So you have to do very disruptive move into the market, but you have to keep it very conservative in the way you roll it out. And this is a very gentle balance to keep. How do you one hand introduce something disruptive, but on the other hand, you don't lose money to anyone because no one like losing money, right? That's the main challenge. What we see is that organizations like Liquidity, like FinStreet, we're basically bridging this, we call it fear gap, between capital, technology adoption to the big financial organization, because they're using organization like ours as an off-the-fence type of outlet to check the technology, and then they join us after we prove it's working. So they deploy through us, and after they deploy using our technology. That's the evolution of adoption.
Yeah. Cindy, what has been your journey with adoption?
Well, I think the market is not really experimenting with something. I think we're starting to see evidence of that. The fact that the MSCI index has currently launched a private and public exposure index basically announces that investors believe that private markets are no longer just an alternative class. It's actually a relevant portion of their portfolio, investment portfolio, as well as that private markets and public markets should be allowed to have interoperability, but also that our partners, such as Franklin Templeton and BlackRock, have already done tokenized money market funds. There's already other asset managers that have tens of billions of assets on chain. So, you know, that's full evidence, but I think also for the UAE emerging in that, which is that we've been as the UAE as Abu Dhabi allocators for a very long time, and thus, you know, we appreciate the new demands for the investors, the new demands of what the global capital flows will take. And so the fact that the UAE is thinking about architecting a global capital markets and first principles is something that, you know, at FinStreet, we're leading the sovereign agenda as well on that.
And what challenges were, apart from Ron mentioned a little bit, that we first go through that path and then all the big ones are basically using our solutions. What challenges were the biggest ones for you, and how did you overcome them to date?
So our biggest challenge was the fact that there's the market you deploying into in order to prove your technology is very different than the market that you're deploying into scaling the business. What do I mean by that? We started the business with deploying capital to tech companies because we define that as the most risky, untangible, super volatile segment of the market. And we said, if we will be able to show zero default in this segment, that will prove our technology works over a long period of time. However, this is relatively a small market, so when you come to scale it up, you basically prove the technology in a market which is not scalable, and now you have to move the technology to other verticals which are more scalable but less friction. So that was our challenge. I think the way we did it is just gradually move and unfold additional verticals one by one. And it's a long play. It's not something you can do in a year or two. It's like a decade-long play.
Wilson, what if you were looking at this new modern financial market infrastructure, what would be what would you like to see from regulators, policymakers, but also innovators themselves for all these new solutions to take flight?
Thank you for the question. First thing, we have the good wish for the regulator and policymakers to further, implement the capital market reform. For example, in China, we ease and lower the barrier of the IPOs, which can provide better and much more opportunities for the the leading startup companies, especially the tech companies. For example, the leading robot company, semiconductor company like Unitree. They don't have the revenue, but they can leverage the capital markets, raise money, and to help them further develop. And secondly is the further opening up of the capital markets. We are welcoming the global investors, like we have already working very closely with the Sovereign Wealth Fund in here, RDM, Mubadala, ADQ. So we help them to get better access to China, to Hong Kong, to the capital markets and to the investment opportunities there. And the third one is a better connection between the regions. For example, we have the Chinese stock exchange, Shanghai Stock Exchange, Shenzhen Stock Exchange, and Hong Kong Stock Exchange to establish the Connect scheme with ADX, with Dubai Global Markets, and so that we are exploring the ETF Connect and Stock Connect between the different stock exchange to help the investors to access the other stock exchange.
Ron, can I go back with you? Because you just mentioned basically how it's building in one market, then scaling it in another. So what would help you in all these efforts when it from regulators, policymakers, even innovators themselves that you fund? What would you see for them, need for them in the future, maybe for this to scale even more?
So we call our solution Liquidity One. The reason we call it Liquidity One is because we're basically aiming to seamlessly move from all stages of origination toward due diligence, toward deal structuring, closing, monitoring, collection, and so on and so on and so on. So the entire cycle is closed in our business. Our business is corporate loans in different scale. I think regulation is less of the problem. Regulation is actually an opportunity because regulation forces many financial institutions to work with an organization like ours because they cannot take the risk directly. Okay, that enables deep technology companies becoming big asset managers. And as long as you can deploy without losing capital, you will scale. So I see it more as an opportunity than a risk.
Cindy, what do you say?
Well, I think the market is definitely inefficient as it stands, and so it wouldn't be possible, in my opinion, to retrofit the problems and make it efficient with a legacy system or legacy regulation. So I believe that if there is some sort of international regulatory harmonization between various regulators across the world, I think that will help. The way that we have as well overcome that is that we have established ourselves within the ADGM, where there is application of UK common law, and the regulators can map to the processes and up to international standards, but still there needs to be a lot more harmonization, whether that's for the Western regulators or the Eastern regulators.
And how do you see this sector in the future? We agreed in my questions it's 10 years from now, but I think that's too fast. This moves at a much higher speed. So in a year or 3 years maximum, where do you see and where do you wish to see this sector? Maybe Ron, let's go.
So I can also, it's for now I can only answer regarding our verticals. I believe the next revolution is going to be CLO at scale. I think what we see now is most of the big players, they looking at CLOs as the most scalable market, but they have struggled to manage this. And technologies that enable fast decision process, low rate of mistakes, and frictionlessness acquisition and sale of the CLOs, we're going to see a lot of changes.
Wilson, how do you see this market in the future?
I just want to mention one thing that we are already doing. I think the tokenization of the real asset, including the infrastructure and the real asset, will be a trend, a very exciting thing. Actually, we are helping a lot of AI data centers to do such kind of things, and this will solve the liquidity problem for the real assets trading system. And also, green finance will be another trend I think will lead to the global capital towards a sustainable transition.
Thank you. Trinity, for
If
the
I
last
could,
one.
yeah, thank you. If I could answer that in one word, it's FinStreet, the next generation of digital capital markets. But just to characterize it, it's capital that's global, assets that are agnostic, private or public, regulation which is modern, as well as there is no limitation on how frictionless and how smooth the market is.
Okay, for one thing is for sure that new solutions are confident, and I'm glad to see that. Thank you all so much for your time, and thank you for your answers, and thank you all for being with us and listening to this topic. Thank you.